Good morning, ladies and gentlemen. Welcome to the VRL Logistics Q3 FY22 results conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhijit Mitra from ICICI Securities Limited. Thank you, and over to you, sir.
Yeah, thanks, operator, and good morning to all the participants, and thanks for joining in. We are here to discuss Q3 fiscal year 22 results of VRL Logistics. From the company, we have Mr. Sunil Nalavadi, CFO. So without further ado, I'll hand it over to Mr. Nalavadi for his opening remarks. Over to you, Mr. Nalavadi.
Yeah, thank you, Mr. Abhijit. And good morning to all participants. I am Sunil Nalavadi, CFO of VRL Logistics. And this is the earnings call of our company for the Q3 of financial year 2021-22. We are glad to inform you that we have clocked the highest ever turnover in this quarter as compared to our earlier quarters with better profit margins. The improvement in turnover is on account of growth in turnover of goods transport segment, which is major segment in our operation, and also growth in revenue from bus operations. During this quarter, the total revenue of the company reached to rupees 683 crores as against 568 crores during the same quarter of the last year, and it is increased by around 20%. The increase in the revenue is mainly contributed by the goods transport segment of the company. The revenue from goods transport segment is increased by 19% from rupees 501 crores to 596 crores, and the growth in revenue of GT segment is on account of increase in realization per ton by 7% and increase in tonnage by 12%. The increase in tonnage is on account of addition of new customers in the existing branches, expansion in network by opening of a new branches in untapped market, focusing on geographic product-wise marketing, and shifting of customers from the unorganized transport service provider to organized service providers on account of reforms in GST and e-way compliance norms. We are hoping that, considering our focus to increase our network, going forward to the untapped market by opening of new branches and the shifting of customers from unorganized players to organized players who are contributing major share in the Indian transport industry, our growth pattern will continue even going forward. The revenue from bus operations is also increased to rupees 75 crores from 52 crores in spite of reduction in buses by 44 numbers. The increase in revenue is mainly on account of increase in number of passengers, increase in seat occupation, and increase in realization per passenger. The total EBITDA of the company is increased by around 29% in the quarter from rupees 104 crores to rupees 134 crores, and the percentage to total income is increased from 18.28% to 19.6%. The increase in EBITDA mainly contributed by our GT segment, which is increased by 24% from 103 crores to 128 crores, and percentage to revenue is increased from 20.59% to 21.47%. The improvement in EBITDA is mainly on account of increase in GT volumes and increase in freight rates periodically. Further, during the quarter, on account of reduction of duties on the diesel by the central government and subsequently by some of the state governments, from first week of November, the overall diesel price has been reduced by almost 12 rupees per litre. Due to the same, the cost of the diesel as a percentage to the revenue is restricted to 29.41%. Otherwise, it would have been higher percentage. The percentage of diesel cost to the revenue is increased from 26.83% to 29.41%, mainly due to increase in year-on-year fuel price. In view to have a better control on diesel cost, we focus to procure more quantity of diesel from the refineries by establishing our own pumps, which is more cost effective as compared to the diesel from the retail pumps. After the reduction of duties on diesel from the November, the procurement of biodiesel is not much viable as compared to the procurement of diesel from the refinery. Accordingly, the quantity of biodiesel has been reduced in this quarter. Currently, we are having our own pumps in 6 locations and another one in the pipeline to commence. Further, we are continuously monitoring the fuel rates and passing the increasing cost by increasing the freight rates. The other major costs such as vehicle running and repair maintenance as a percentage to the revenue is reduced from 7.48% to 6.55%. The tire cost is reduced by 1.1% from 3.43% to 2.38%. And the employee cost is reduced from 14.68% to 13.76%. In view of these changes, the EBITDA margin is improved from 20.59% to 21.47%. The EBITDA of bus segment also improved from 5 crores to 11 crores on account of improvement in realization per passenger as well as occupancy levels. The total EBIT of the company is increased from 63 crores to 90 crores and percentage to revenue is increased from 11.06 to 13.10%. The increase in EBIT is mainly contributed by our GT segment, which is increased from 71 crores to 93 crores, and bus segment EBIT also improved from 2 crores to 8 crores. On account of improvement in EBITDA and EBIT, the PBT of the company is increased from 55 crores to 78 crores, and percentage to revenue is increased from 9.59% to 11.38%. And PAT is also increased from rupees 40 crores to 61 crores and percentage to revenue is increased from 7% to 8.93%. When we compare our performance in this quarter to the previous quarter, the performance is further improved in all the aspects. During the quarter also, the total revenue of the company is increased by 7% from 638 crores to 683 crores. And again, the contribution in the revenue growth is contributed by goods transport segment, which is increased by 5% from 569 crores to 596 crores. And the increase in GT revenue is mainly the increase in realization per ton by 1% and increase in tonnage by 4%. The revenue from bus operation is also increased by around 49% from 50 crores to 75 crores. And the number of buses during the quarters are increased from 280 buses to 288 buses. And the total EBITDA of the company is increased from 115 crores to 134 crores and percentage to income is increased by 1.57% from 18 to 19.6%. And on account of increase in EBITDA and EBIT number, the overall PBT of this quarter as compared to quarter 2, it is increased from 66 crores to 78 crores and simultaneously net profit is increased from the quarter is increased from 50 crores to 61 crores. Further, as of 31st December, the net debt of the company is 101 crores, which is almost equivalent to the debt as of 31st March. And during this 9 months, the company has invested around 137 crores in the capital expenditure. And the main investment is in the goods transport segment, which is around 110 crores. Going forward, considering the fact of expansion in branch network and shifting of customers from unorganized fleet operators to organized fleet operators, we expect that the volume growth will continue in the coming quarters also. Moreover, since the fuel rates have been reduced from November, the benefit of reduction in fuel prices was there only for 2 months in the quarter 3. If there will not be increase in the subsequent period, the additional benefit of 1 month will come in the quarter 4. Further, as we are having the best method of operations with our own infrastructure facilities, we can have a better control on key expenses and maintain the margins in the coming quarters as well. Considering the good cash profits of the company, the board has declared a dividend of rupees 8 per share to reward to the shareholders in this quarter. With this, I conclude my initial brief and I request to the participants for question and answer. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touch phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir, good morning and thank you for the opportunity. My first question is on the pricing, sir. I mean, obviously you mentioned, you've seen the diesel prices come off from November. So isn't there any kind of pressure on us to reduce pricing, as we pass through this to our customers?
No, just I informed the quarter-on-quarter, the realization per ton also increased by 1%.
Yeah. So my question is, why? I mean, isn't there any, aren't customers asking for a reduction in pricing is what I'm saying?
No, since for the earlier period there was a major increase in the diesel price, especially the quarter 1, quarter 2, and quarter 3 of this year. So we are in a position to convince to the customers that during that period, see, once we increase the rate in April, with around 10% we increased, and effectively the realization has been improved by around 7%. So considering those increases in the diesel prices, we are convincing to the customers that we have not increased freight rates during that time, and we will not reduce during this time also.
Right, and we are confident that we'll have to hold on to this, or say some of the large customers we might have to pass through, or I mean, like you mentioned that in the coming quarter we'll have the benefit for all 3 months. But even beyond that, do you think we can hold on to the prices? Obviously, not looking at any further diesel hikes, but if I look at the status quo, then we're saying that we can continue to maintain this kind of price.
Yeah, definitely we can maintain the current prices.
Okay, right, understood. And my second question is on the comments you had made on adding branches, especially in the untapped markets. In your presentation, you have mentioned about the 9 months, how the percentage wise split across the branches, and I see that East is 15% and West is 22%. I mean, I probably have expected that to have gone up, the incremental branch additions in East to have been higher, because South is 38%. So untapped markets, do you mean within South, or are you looking at expanding in East and the Western regions also?
No, the major concentration will be the north and eastern part, where actually the number of branches are going to be increased. But in South, wherever possibilities are there, wherever potential areas are there, in such areas actually we increase the branches. And see, we were having a plan to increase the branches to around 100 plus branches, and till December we added around 60 branches.
Okay.
So still around 40-50 branches are in the pipeline to open in these markets, especially in the eastern and northeastern areas.
Right. So with this branch addition, these eastern regions, etc., we can see our lead distances go up, and so per ton realizations can be higher. Can we factor some of those, and how do you see this branch mix being, say, 2 years down the line? The East, which is say 15%, how could that be, say, 2 years down the line?
Yeah, basically, see now what we acknowledge is by opening of these branches, actually the contribution from these new branches is around 2% to the tonnage, additional 2% for a 9-month period. And so going forward, definitely the contribution will be more from these branches. And apart from that, since these are the long distance, definitely the realization will be better, and the utilization of the vehicles will be much better.
Right. Great. So I'll get back in the queue. Thank you so much.
Thank you. The next question is from the line of Alok Devra from Motilal Oswal. Please go ahead.
Good morning, sir, and congratulations on great numbers. Sir, just wanted to understand that the diesel prices have remained unchanged from start of December till date. So so how has the freight rate moved, sir, during the last couple of months for us?
Yeah, we maintain the freight rates. In fact, quarter 2 to quarter 3, the 1% realizations have been improved. Just I want to give some light on this diesel price. See, in the month of October, our procurement cost was around 95 rupees per liter. And in the month of November, it was around 87 rupees. And in the month of December, it was around 83 rupees. And in the month of January, again, it is continued as 83 rupees. If it continued further February and March, as compared to average price of these 3 months in the quarter 3, it will be much less in the quarter 4.
Sure. And so the freight rates will continue to kind of remain at the current level. So the
With
margins
this reduction, again, with this reduction, we are going to maintain the existing freight rates.
Sure. So margins in Q4 could be better than what we have done in Q3 then.
Yeah,
Because
we
Q3
can
the
maintain
benefit
the
came.
margin because
Yeah.
there are some increase in other expenses also. Say like employee cost, actually we have given a hike from the January onwards.
Okay.
So the employee cost will increase around, other than drivers and labor, actually we have given an increment to other employees. So that will be increased by around 10%. Around 10% increase is there, will be there in employee cost. But with this reduction in the diesel price, definitely we can maintain the margins.
Sure. Sure. And sir, the bus segment has also seen a turnaround in at the EBITDA level. And so what is the outlook there, sir? It seems to be more sustainable as the COVID situation further normalizes and the activities start. If you could just throw some light on the bus segment side of it.
Yeah, definitely it will be a sustainable business. One thing is, so like otherwise earlier they used to put a lockdown and put a lot of restrictions on the passenger travel. But this time actually there are no such restrictions. In the sense, only thing is about interstate transport and all, some RT-PCR report needs to be provided. Even some of the government, especially Karnataka government, is also rethinking to withdraw that RT-PCR requirement as of now. So people are traveling. So definitely it will have a good kind of a numbers in the coming days.
Sure. So how fast we can reach our earlier run rate, sir? I mean, 350 crore sort of a revenue which we were doing before on an annual basis. So
now see, during 360 crores turnover, we used to operate with around 350, 360 vehicles.
Yeah.
Now overall the number of buses have been reduced to around 280, 288 numbers. So with this reduction, proportionately that revenue will be less, but margin will be definitely, we are hoping that it will reach again at a EBITDA level of around 16-17%. But Q4 it will be slower because of this examination and all these things. But Q1 again, from Q1 of next year, definitely that segment is going to do well, and definitely it will back to the earlier levels.
Sure. And so, sir, here we are now, since the situation is improving, we are looking to now again add buses, or we'll just wait for some time?
No, definitely we'll wait for some time. We are not having plan to add good number of buses today. We want to acknowledge from the market that if there is a sustainable growth, then only we will put additional capex. Otherwise, there will be some minor capex will be there in the bus segment, say wherever the established routes are there, where actually we need to put on buses. Only in those areas actually as a replacement we put some additional buses, but as of today there will not be major capex in that segment.
And with this 280 buses, how much revenue we can do?
With the 280, this quarter we did around 75 crores. Definitely we can reach around 85 crores quarterly.
Sure. So that would mean roughly around 320 crores. Okay, got it. And sir, what would be the full year capex, sir, for this year?
This year we did around 137 crores in the 9 months period, and there will be another around 30 crores capex in the last quarter.
Sure, sir. So just last question from my side. We had this capex plan of around, as in the unit which you are looking to buy for 175 crore. Any update on that, sir?
Yeah, since the documents are not cleared, that we hold as of today, and there is no clarity as of now, because we also anticipating that it will take longer period, because some of the documents are not yet clear at the government level.
Sure. Well, that's it from my side, sir. Thank you so much and all the best.
Thank you.
Thank you. The next question is on the line of Devesh Jawar, an individual investor. Please go ahead.
Hello.
Yeah, please.
Yeah. Congratulations, sir, on a good set of numbers. I just wanted to know the dividend policy of the company, and the company has announced a dividend of 8 rupees per share on a 9-month EPS of rupees 11.76. So how would be the capex going forward? It would be funded through debt or through reserves of the company?
So definitely, if we see the quarterly cash profit, we are generating almost around 100 crore cash profit in a quarter. So in a year, there will be a cash profit of in the range of around 400 crores. Out of that, currently, if we consider the current dividend, which is almost around 70 crores, and even if we consider a capex of around 150 crores, still we will have a surplus cash flows in our hands. So that will be utilized for the repayment of existing debt. And in my view, definitely the debt level will come down instead of increasing the debt level. In spite of a capex of around 150-160 crores in a year.
Okay, so I think due to depreciation and other account measures, the EPS is not the correct measure to calculate the cash flows of the company. I think you will be generating a lot of cash, so dividend payout ratio will always be high for the company.
Yeah.
Okay, thank you.
Thank you.
Thank you. The next question is on the line of Harsh Shah from Dimensional Securities Private Limited. Please go ahead.
Yeah, good morning, sir, and congratulations for great numbers. So my question is on the underlying industry. So can you just throw some light on which are the major industries that form your volumes, and from where are you getting good traction? If we talk about volume growth of 12%, and even you're guiding 12 to double-digit kind of growth going ahead. So which are the industries that you are thinking is expected to do well?
Yeah, basically by expanding this branch network, what is happening, the contribution from the existing branches are going to increase, because the moment say we open one of the branch in say Assam, that branch will be contributed by the all branches to Assam. That's how actually the network will contribute. So in terms of goods, again, the major contribution is happening from the textile, which is earlier around 16-17% in the normal period of operation. It used to contribute around 16-17% to the tonnage, but last quarter the contribution from the textile is increased to 19%. And similarly, the agriculture commodity and other kind of stuff, it was in the range of around 8 to 10%. Now that contribution is increased to 10 to 12%. Whereas rest of the commodities like industry goods, spare parts, machinery, pharma, even a lot of these books and periodicals, general items, these are all in the range of around 4 to 5% to the overall contribution. So major contribution is again textile and agriculture commodities, you can say.
Okay, understood. And sir, how much percentage of our business would we be generating from SME and MSMEs?
That is difficult, but we are considering as a B2B rather than SME or MSME. B2B, almost around 95% of the commodities we are booking the B2B consignments. Basically, see how it will happen is we are having a three mode of booking to the customers. One is the account customer, where actually we provide a monthly billing facilities. There actually a lot of these corporates and other companies will be there. So the overall that contribution is around 20-21% to the revenue. Whereas rest of all paid and to pay business we are having, which is almost around 80% of our business. So there actually one leg of operation is by the corporates, other leg of operation is SME. So payment will be, many payments will happen from the SME segment, whereas the consignment will move from corporate to these SMEs. That's how it is.
Okay, understood. And sir, increasingly we are seeing that many corporates are moving towards 3PL logistics. They want to integrate their supply chain. So in such a scenario, how do we see ourselves in this industry? So will we work for such 3PL logistics, or we will continue to operate the way we are and we will still survive and thrive in such scenario?
So basically the 3PL operators, we ourselves are not providing the exclusive warehousing facilities or something like that, inventory management and warehousing facilities to the customers. But what we are doing is actually we are giving our space on hire to some of the corporates. So they are using our space and giving us monthly rentals. But we are carrying, many of the commodities from this warehouse to distribution network to distribute their commodity to multiple areas.
Okay. So with the importance of 3PL logistics continuing to increase, how do will we continue to see the kind of growth in our business that we are doing?
Yeah, definitely. See, as I mentioned, because of a lot of shift is happening from the unorganized fleet operator to organized fleet operator, definitely we are anticipating good growth in the existing segment. See, like many customers, we are providing service to like Wapco, Dealing, Ashok Leyland, Bajaj Auto. See, even though Hindustan Unilever for that matter, they might be having a warehousing and inventory management with a third party. But these are the direct to actually the corporates actually we are billing to them.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is on the line of Suraj Navandar from Sampada Investments. Please go ahead.
Hi sir, good morning sir. I just have one question sir. What has been our capacity utilization in both the segments, passenger and goods transport?
Yeah, hub to hub operation will be 100% capacity utilization, and hub to spoke normally it will be in the range of around 65 to 70% utilization.
And in the passenger vehicle segment, what has been the utilization levels?
Yeah, passenger utilization is around 85%. So in quarter 3, that seat occupation went to around 86%. And the realization is around 1,100 rupees per passenger.
Okay, great. Thank you, sir.
Yeah.
Thank you. The next question is on the line of Kaushal Shah from Dhanki Securities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, if you can share some details in the bus segment, the number of passengers that we have done or the average realization, that will be helpful.
Yeah. In quarter 3 of the current year, total number of passengers traveled is around 6,58,000 with a realization of 1,131 rupees per passenger, and average occupation is around 86%. In quarter 2, the total number of passengers traveled is 4,77,000 with an average realization of 1,047, and occupancy levels were at 78%. And in last year quarter 3, the total number of passengers traveled 5,17,000 with a realization of around 1,000 rupees, and average occupation was around 85%.
Right. And so you mentioned about debt reduction. So any number that you would be looking at to kind of retire debt. So let's say 1 year down the line, what could that number be? And also on the capital expenditure front, now that the scenario is looking more buoyant, what will the likely capex number be for the next year?
Yeah, definitely. See, basically with this routine capex, what we are doing, definitely it will be in the range of around 150-160 crores in the next year. And the capex, even if we consider say around 400 crores, so still we will have a surplus cash flow of around 250 crores, and some portion will be go for a dividend and some portion will go for a reduction of a debt.
So the total debt number, what will it look like? Maybe let's say 1 year down the line, or for instance,
it will drastically it will come down. Currently we are having a 100 crore debt, so probably it will reach hardly around 25 to 30 crores in my view. But again, it depends on the capex, and capex in our case always we take a very short term call based on the requirement of the vehicle, based on that kind of stuff. If any warehousing we need to add, then definitely there will be more capex.
Right. And one final question, sir. The budget has spoken about blended fuel, and being blended fuel being made compulsory. Otherwise, there will be an additional 2 rupees. So, do you think now the availability of that blended fuel and in our terms the costing of it, do you think will it make a tangible difference to players like us?
No, basically blended fuel, they are more to concentrating towards the petrol because the ethanol mix is happening only in the petrol, not in diesel. And diesel, the alternate fuel is about the biodiesel, which is mainly producing out of the palm oil importing from the outside India. And since the palm oil prices are increasing and on the other side, even the biofuel rates are increasing. So just I mentioned in my initial remark also that compared to our procurement cost with the refineries as compared to biodiesel, it is not viable as of today. So definitely always we think about the alternative wherever the cost savings is possible. If tomorrow biodiesel is available again at a 5-6 rupees cheaper than the existing price, definitely we will add a biodiesel in our total usage of the fuel. Always we are open for that.
Right. And so just one last point on the Surat hub, if you can share for the 9 months what number we did in terms of either tonnage or revenues.
Yeah, definitely. Good.
Thank you. The next question is on the line of Vikram Vilas Suryavanshi from Phillip Capital India Private Limited. Please go ahead.
Yeah, good morning, sir. I think most of questions were answered for me, so thank you.
Thank you. The next question is on the line of Kaustav Bubna from Rare Enterprises. Please go ahead.
Yeah, hi. Just wanted to understand what are the current freight rates versus pre-COVID levels. I'm just trying to get an understanding of to what extent can you keep increasing freight rates if commodity prices like diesel keep going up?
Sorry, your voice is not clear, sir.
Can you hear me now?
Yeah, please.
So I'm trying to understand what are your average freight rates currently versus pre-COVID levels. I'm trying to get an understanding of to what extent can you pass on these higher diesel prices to end customers through freight rates?
No, just I mentioned that our realizations have improved by around 7% year on year.
No, correct. But let's say
we
diesel
will not
prices.
share the hard number of the realization.
Sorry?
We will not share the hard number of the realization, the absolute number of realization.
No, what I'm trying to understand is how much longer can you keep passing on higher fuel costs to the end customer? Is there more room?
Yeah, normally we pass it on to the customers on an immediate basis. Basically, what we do is we will not increase on a daily basis or monthly basis. At least on a quarterly basis, actually, we will revisit our freight rates.
Okay, thank you.
And just I want to give, in earlier question, they asked about the Surat volume. Currently, we are handling around 3 lakh plus ton in Surat facility, which is all. Yeah. So there is an improvement of around 22% year-on-year growth in the tonnage.
Mr. Bubna, are you done with your questions?
Yeah, thank you.
Thank you. The next question is from the line of Alok Deshpande from Edelweiss Financial Services. Please go ahead.
Yeah, good morning, sir. So just a couple of questions from my side. One, so you mentioned about double-digit tonnage growth for next year. We are looking at this year as a base, right? Or are we looking at from the current levels that we are doing?
Yeah, this year as a base.
This year as a base.
Yeah.
Okay. And Sunil sir, the other thing is, I just wanted to again, go back to the bus operations part. You mentioned that we are operating with a lower number of buses than what we were operating earlier. So do you think that we will reach that utilization number even with a fewer number of buses sometime in the next 2-3 quarters? Compared to the level that we were doing earlier?
In quarter 3, more or less we reached that occupancy level. Even earlier when there was a normal period of operation, we used to do the occupancy levels in the range of around 86-87%. In quarter 3 also we did around 86% occupancy level, whereas realization was in the range of around 1,200-1,300 during that time. Now it is around 1,100 rupees. So there is a scope for increase in the realization. and that will help us to increase our margins in the bus segment.
Thank you. The next question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Hey, sir. Thank you for the opportunity again. My question is firstly on the lorry hire charges. I'm not sure if you mentioned that number. Could you, give that number this quarter?
Yeah. So what you want in that?
The lorry hire charges in this 3Q as a percentage of revenue.
Yeah. See, lorry hire charges is increased by around 1.38% from 7.25% to 8.63%. And the overall lorry hire expenses increased by around 25% from 41 crores to 51 crores.
Okay.
Quarter on quarter it is. If you want year on year.
Last year, same quarter. Okay.
Yeah. Year on year, it is almost same percentage, around 8.75%. Actually, it is decreased to 8.63%. And overall lorry hire expenses increased by around 17% from 44 crores to 51 crores.
Right. So on this lorry hire charges as well, we would have made better margins because the lorry hire charges would have come down as the diesel prices went down. But
No,
we didn't have
not the case. That is not the case actually.
Okay. You had to hire the lorry at the same prices.
Yeah. Even during so prior to when the diesel price was high at a peak level, during that also that time actually they compromised with the margins and they operated.
Right.
Yes.
Right. And sir, secondly, you had just told us that you hike prices every 3 months or like every quarter or so. But historically, what you've been doing is you've been doing once a year, around that 8 to 10%. So is there any change in thought process there from your side?
It always depends on the changes in the cost structure. Okay. So basically, what we do, we review on a monthly basis. So see how the profitability is. Then accordingly, we will take a call.
Right. So are we? Say last April. I'm just finishing up the same question. Just the last bit. So last April we took a 10% hike. Are we looking at any hike this April again? Like the once a year hike?
No, with the diesel price, if it continues as it is, there will not be increase.
We will not do that. Okay.
Yeah. If change in the fuel price, then definitely we will think about increasing the price rates.
Sure. Thank you, sir. That's it from us.
Thank you.
Thank you. The next question is from the line of Manish Ostwal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity. I have a question on our slide number 16, where we mentioned that procurement of biofuel at 8.01% of the total quantity 9M FY22. So, what is the reason of decline of contribution of biofuel in the total fuel purchase?
Yes, that's not cost effective as of today. After the fuel prices have been cut from the November, so that is not a viable to buy the fuel biodiesel.
Okay. And second, sir, what is our strategy on the electric vehicle addition in our fleet, both the goods and the bus segment? So, what is our overall strategy? Can you elaborate?
Bus segment anyway is still we are not thinking, but in last mile connectivity, the smaller vehicles, we are planning to add some of the vehicles. So in the 9 months also we added around 19 vehicles. So around 40 plus vehicles we are operating today as a smaller vehicle, say 1 ton capacity like that. So going forward, wherever it is necessary, especially in metro cities, just we are concentrating to add more electric vehicles. It is very cost effective.
So in your view, the electric vehicles are cost effective within the city. If we are taking goods from city A to city B, then it is not that viable. That is what you are saying.
That kind of vehicles are not yet available in the market. See, these vehicles are say around 1 ton capacity vehicles.
Thanks a lot, sir. Thank you.
Yeah.
Thank you. The next question is from the line of Bhargava from MK Global. Please go ahead.
My question has been answered, so thank you so much. Yeah.
Thank you. The next question is from the line of Shivaji Mehta, an individual investor. Please go ahead.
Hello, am I audible?
Yeah, please.
Yeah, thank you for this opportunity, sir. Sir, historically, whenever we have slipped to a mid-single digit kind of a growth rate, revenue growth rate, and when we look at the margins in those years, generally whenever we come down to those kind of growth rates, our margins take a big hit. So what I'm trying to understand is, going ahead, if in any year we kind of fall back to a mid-single digit kind of a growth, will margins take a hit, or has something structurally changed in our cost structure which can help us sustain these kind of margins?
No, basically earlier also I used to say in my calls, whenever the volume growth is there, obviously we'll have a more flexibility on the margin side. Definitely there is a more scope to increase the margins. Basically, since we are operating with our own infrastructure facilities, definitely the utilization levels will be much, much better. So considering that fact, as of today, what is happening, we are having a very optimum level of infrastructure with the current tonnage what we are handling. So going forward, if we maintain the same infrastructure, even with the minimum growth of a tonnage, the EBITDA margin or operating margins are maintainable. If volume growth, double-digit growth, what we are talking, definitely there is a scope for further improvement in the margin.
Right, makes sense. So also, if you can give us some color on how the shift is happening from the unorganized to the organized sector, and are you seeing an acceleration in that pace, or just some color around that will be helpful?
Yeah, just I want to highlight one of the government remark in the recent GST collection. In the January collection, even the finance minister has made it clear that the collection is improving. One is, apart from the growth in the economy, there is a lot of control or curb on the fake invoices or fake transactions. So normally this fake transaction, whatever the non-compliant transactions are there, these transactions are mainly routing through the unorganized fleet operators. Since the government is bringing a lot of restrictions or a lot of controls on these kind of transactions, definitely it is going to help to the organized players. And moreover, it is to VRL. The reason is, currently, even in our case, many of our customers or kind of the commodities what we are handling, these are all non-corporates, or earlier they may do some of the non-compliant transactions. Now they are shifting to compliant transactions. That's the reason actually it is going to help us to increase the tonnage.
So is there any number you can provide? How much, say, it was 5 years back versus how is the unorganized sector currently?
See, overall tonnage growth, what it is happening, see, out of the existing customers, there will be growth of around 2 to 3%. And out of the network expansion, it is in the range of another 2 to 3% growth we are anticipating. And rest of the growth, actually, it is all new customers. They are coming with a compliant transaction.
Right, makes sense. So last question, with the kind of cash flow that we'll be generating and the kind of debt reduction that you just talked about, should we not look at certain adjacencies, look at some other areas in logistics which we can naturally extend into, like 3PL or some related area, with this kind of a cash generation that we'll be having? Just your thoughts on that.
No, basically we want to concentrate on the existing line of operations because it is giving good kind of a growth as of today. And that's the reason actually we are going for an expansion in network. See, as a immediate, target or achievement, basically we plan to open 100 branches. Out of that, around 60 branches have been already opened. Next 30-40 branches will open very soon. And after that, again, we will have a plan to again further expansion in the network. So basically, and wherever the infrastructure facility required for this operation, say to buy some of the transshipment hubs or something like that, which will make more cost effective to us. So we do such planning rather than going for the other line of operations.
No, sir, but if you look at it, the only two white spaces which you're going to kind of fill is by expanding into north and northeast. Post you have kind of set up hubs in those two geographies. Don't you think growth will saturate post, say, 1 or 2 years once that expansion has been done?
No, absolutely no. Why the reason I'll tell you. Currently, the south zone is contributing almost around 40% to the tonnage. The western region is contributing around 20-22%. And another 20% is coming from the north and eastern part. So that region is contributing very less tonnage as of today. And even western regions also, see, within western region, we do not have much of service as of today. So considering how we developed in the south, we want to replicate in these regions also. So whenever we start growing in those regions, automatically south region, the volumes will also improve.
Right. Makes sense.
There are tremendous growth in the opportunities in the existing line of operations. Just we want to concentrate on those opportunities rather than diluting our concentration.
Right. Thanks a lot, sir, and wishing you all the very best.
Thank you.
Thank you. The next question is on the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Yeah, thanks for the opportunity. My question is, when we say that diesel prices are like 83 rupees per liter in January, and if it remains here, we'll maintain our freight rate. So margins which we did 21.5 in GT segment this quarter. So did you say that they can further expand, or some other cost inflation will catch up, so which will help offset the benefit of higher freight rate?
No, just I throw some light on increase in the employee cost also in this quarter. From January onwards, around 10 to 12% increase will be there in the employee cost. But apart from that, just I highlighted about the diesel price. See, in the last 3 months, how was the price and how the price is in the month of January. So if January price will continue as it is, then definitely there is a scope for improvement in the margin.
Okay. Sure. And just some question on when we say that we are adding one more pump, diesel pump, so is this a capital expenditure or is it some OPEX which we do? Like we have 6 pumps and we are adding one more pump.
Yeah, the total investment for one pump will be in the range of around 2.5 to 3 crore rupees. So currently we are having a own pumps in 6 locations and one more pump is coming in Salem.
Okay, so these pumps largely cater to the 40% tonnage of south, or these are like all India pumps and they service trucks going all over the, across.
We are having a pump in Bangalore, Chitradurga, Hubli, Hyderabad, and Kishangarh, Surat. So Surat is another place. Even Kishangarh and Surat, these are connecting places from north to south, north to west and south. And Hyderabad is connecting again towards eastern routes also.
And when we say the 83 rupees per liter is a procurement price, so this is from these pumps or some other refineries which we procure from?
No, this is 83 includes even purchasing from the retail pumps also. This is the average price.
Sure, sir. These are my questions. Thank you.
So from refineries, again, it will be lesser by around 2 to 3 rupees.
Sure, understood.
Thank you. The next question is on the line of Vikash Khatri from VRL. Please go ahead.
Good morning, Sunilji. My question is that your largely volume revenue in goods transport comes from the previously you have started a service in the express domain also. Is that service continuing? If continuing, then what's the contribution of express services in the revenue? And second part of the question is part load industry is facing tremendous pressure from the express industry, that express is snatching volume. How we are planning to retain our volume and it doesn't move to the express industry?
No, basically the kind of commodities what we are having, the kind of commodities, even the customers with whom we are getting the tonnage, these are a lot of general parcels with a part truckload. So even in our service, we are having a door collection and door delivery service to the customers. See, that is almost around 30-35% of our tonnage is door collection and door delivery service. That option is always there to the customers that if they want door delivery services, we are in a position to give that kind of a service. So even that is growing in our overall tonnage. So considering this fact, we are not facing much of a threat from this express cargo company.
Okay, as such express, are we offering any service within our portfolio?
Sorry?
As express offering, are we offering any service within our portfolio or all the products are same time sensitive?
Definitely the service what we are providing, it is in line with what the express cargo companies are giving. That's why we are having a lot of corporate clients, around 20-25% of the 21% of the business. Actually, they are much happy as compared to other express cargo companies. They like Wapco, Dealing, Ashok Leyland, I mentioned. No, even the recently last 1 year we started Reliance Retail, and they are expanding the tonnage, considering our service level.
Okay, thank you.
Yeah.
Thank you. The next question is from the line of Dipesh from Equirus. Please go ahead.
Yeah, hi Sunil sir. Good morning and thanks for taking my questions. Sir, last quarter you were guiding to add 100 GT vehicles per quarter in second half, but in Q3 you added only 54. And with 30 crore capex guidance, I think you're guiding the same 50-55 vehicle addition fourth quarter. So just want to understand any decrease in your volume growth outlook that you have tapered down your vehicle additions?
No, basically, see how it happens is even though currently we are hiring the outside vehicles in some of the routes, there actually we can replace with our own vehicles. That possibilities is there. So the vehicle addition is nothing to do with the volume. See, once the sustainable volume growth is there, then we will decide on the capex.
Okay. No, so generally, like after the second quarter, everybody was upbeat, but November was a weak month, and then obviously in January again the lockdowns happened partly. So any changes in you're seeing on the ground in the volume growth uptick that was supposed to happen in second half, that has not happened?
Yeah, basically even in January, year on year again there will be a growth, even for January month. So in February it will be much better because a lot of things are normalized now.
Understood. And sir, to one of the earlier participants, I think you spoke about some capex where the documents are still not ready. I did not understand that fully. If you can please elaborate on that.
No, we were planning to have the warehouse what we are operating in Bangalore as of today. We wanted to buy that property. So the total capex for that property is in the range of around 160 crores.
Okay.
We were planning to buy that property, but since the documents are not yet cleared, that is on hold.
Okay.
And in short term also, I don't think so it will happen.
Okay, got it.
But it will continue as a lease premises. What we are operating today, it will continue. It is a long-term lease property. Currently, the 20-year lease period is there. Out of that, almost around 10 years completed now. So another 10 years we are having a lease term.
But any reason why you are looking to buy that instead of Surat you did that and you are doing amazing volumes there? So any similar kind of thing?
In Bangalore, actually, that owner wanted to sell the property, and apart from that, currently we are paying a rent of 110 crores per month to that particular property.
Okay.
Even if you see the return on the investment, it will be the good proposal compared to continuing as a lease premises. And we can bring in a lot of additional added facilities like good maintenance facility. Anyway, own fuel pump is there, but apart from that, we can give some of the premises for warehousing and all these things. That was a plan. But we are very, until the title and other things are cleared, we are not going to do that.
Understood. Sir, lastly, I just observed that your number of agencies were declining for the last 2-3 years, but this quarter there is a slight uptick. So just wanted to check if there is any change in thought process of agencies versus the own branches kind of growth.
No. See, agencies will be restricted again. See, wherever most of the new branches we are opening to our own branches, because agencies they are having their own limitations. So that's the reason we are giving more focus to our own branches.
Got it. So going forward in the untapped markets that you spoke about, the growth will be led by the own branches only. That's what you're.
Yes.
Understood. Sir. Thank you and all the best.
Yeah, thank you.
Thank you. The next question is on the line of Alok Devra from Motilal Oswal. Please go ahead.
Sir, thanks for the opportunity again. Just you mentioned about this new pump you are looking to buy. Just if you could just elaborate on this. These pumps actually help. It's for us, our captive use only, and it helps us reduce the fuel cost. That's what understanding we get. Is that correct?
Yeah. See, wherever the long lease properties we are, see Hyderabad actually last year we moved to the longer lease period, the new premises. There actually we established our own pump. Even Salem also we shifted to new premises. There actually we are establishing our own pump. So the particular area is not belong to us, but whatever the investment belonging to that particular pump is, that the storage tank and all, we invest those infrastructure. That will be in the range of around 2.5 to 3 crores per pump.
Sure.
And always we'll see that average consumption should be at least around 15 to 20,000 liters per day. Only in such potential areas we are establishing our own pumps.
Sure. So, sir, if the diesel price is say 90 rupees and at the retail outlet, then what would be our cost then for if we use?
Always it is cheaper by around 3 rupees, 3.5 rupees as compared to retail.
Okay, and if you take directly from refineries then?
No, refineries I am saying.
Okay. So this is only, I mean,
the fuel price compared to retail fuel pump versus our own pump will be cheaper by around 3.5 rupees.
Got it. And what would be our current consumption pattern if we take it from, how much we take it from retail outlets and how much is through our this?
Currently, see, own pump we are consuming almost around 40% of our requirement and around 60% with the retail outlets.
Okay. So, sir, here also there is a big scope to kind of save, right? I mean, because you are not using biofuel much.
But again, the usage should be in the range of around 15 to 20,000 liters. That's what I mentioned.
Yeah.
And see, Salem is in the pipeline. Just we are thinking about Vijayawada also. But Vijayawada actually we are getting a biofuel. The source of biofuel is very near to that Vijayawada.
Okay.
Yeah, that's the reason actually Vijayawada still we are buying the biofuel. Whatever that small quantity is coming, it is from Vijayawada.
Yeah. Got it. So, sir, by doing this, actually we are saving on the commissions which the retail outlet there would typically make.
Commission is one part. Even the price is also differs.
Okay. Got it.
Bulk quantity we buy. No, whenever we buy from the refinery, it's always is a bulk quantity.
Sure. So when you say that you buy from refinery, that means you mean your own pump only there?
Yes.
Got it. Okay, sir. Thank you, and thank you. All the best, sir.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Sunil Nalavadi for his closing comments.
Yeah, thank you very much for all the participants for your patience hearing. If any additional clarifications or any requirements are there, directly you can contact me. And apart from that, considering the present business structure and the growth in the business, we are anticipating that this growth pattern will continue even in the coming quarters with good operating margins. Thank you, one and all.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.